Students, welcome to my Smart Tally Prime YouTube channel. My name is Baburao from Hyderabad. Before entering into our topic today, an advice to you. If you want to learn Tally Prime, GST, TDS, TCS, everything perfectly, gaining expert knowledge and become expert accountant, please follow and practice all the videos in my channel in the same order, that is in the number-wise order, serial order. I uploaded. So you follow in the same order, you will gain expert knowledge and you will become expert accountant. And then next, all the persons visiting my video, that have been visiting my channel, please subscribe to my channel. If you have not already subscribed, if you are subscribed, it's okay. Only once you can subscribe. So subscribe and then click the bell icon and select all option. So you'll get notification for all the videos which I am uploading. Okay. And then you share my channel with all your friends as well as others who want to learn. Anybody, students or working accountants who want to learn Tally Prime with all the GST, TDS and everything perfectly. So you share with them. And while watching the videos, you watch each and every video till the end. Because if you skip in the middle, you will learn only the theory part and the practical part, how to implement that and how to record in Tally Prime. The practical part you will miss. So view the video till the end, even if it is a long video, because my videos will be always long videos because I explain in elaborate way. Okay. And then you, after watching the video, you please like my channel, and at the bottom in the comment section, you please without fail post your comments regarding with your idea about this video. You post your comment, anything, how is the video and anything you cannot understand, anything, you post the comment without fail. And then the other one is, see the channel, my channel and all the videos in my channel are all completely free. You can see any number of times, whatever, you can learn very well. But in addition to this is all completely free. And in addition to this, I am running online classes also, but the online classes are not free. They are paid classes. And if anybody is interested to join the online classes, please send your details like name, qualification, place, your work, everything. And then I will contact you and I will let you, I will inform you the date of the new batch. When the batch is starting, I will inform you and you can join the classes and attend. You can join and attend the classes. So my contact details are given in the about section of this channel. We'll go there. There is email address and mobile number. So through the email, you can send the details, and in the mobile number, you send only through WhatsApp message. So I will call you and I will tell you, I will call you, then I'll fix up. And when the batch is starting, I will inform you. Mostly every month, first day of every month, I will start. Okay, first day of 15. Okay. So this is about the classes. And now we will enter our classes, our topic today. So today our topic is interest calculation in Tally Prime. The Tally Prime, how the interest is calculated, simple and compound. Okay. And first of all, we will know about the interest and then simple and compound. So actually, what is interest? See, when you are doing the business, whether it's as a trader, buying the goods and selling the goods, as a manufacturer, buying the raw material, manufacturing the goods and selling the finished goods, whatever it may be, you are investing a lot of money and you are selling and you are getting profit. And when you are doing this business, if the debtors, that is the customers, if they pay the money promptly, it will be okay. So we can again buy and we can sell the goods, you can make profit. If he does not pay quickly, if there is a lot of delay in the payment, then you are going to lose. So legitimate return on the money which you invest is less. You are losing, because if we take a lot of time, we are losing the interest on this. So that is why, to compensate the delay in the payment, we charge some amount, it is called interest. So that interest is charged by the seller from the buyer, from the customer. So when you are selling, we collect the interest from our debtors. When you are purchasing, we pay interest to the sellers, that is sundry creditors, if there is delay in the payment. Okay, so for that, interest is paid, that is charged. And how the interest is charged? So the charging of interest is of two types. One is simple interest and the other is compound interest. Means simple interest means just calculating the interest on a single fixed principal amount. So every month, every time, that is every period, that is monthly or quarterly, whatever it may be, the charging of the interest will be, calculation of the interest will be on the principal amount, only fixed amount. So for example, that we sell the goods for, I will show you one example. For example, so 20,000 into 4 pieces, totally 80,000 is the sales. So when you sell for 80,000, if the interest you are charging is 2%, so that the interest will be 1,600 rupees per month. So in the case of simple interest, so the interest will be charged at 2% every month on the same principal. The principal amount is 80,000. So on 80,000, we charge 2%. So first month, 1,600. Again, second month also, the same 80,000 into 2%, 1,600. Third month also 1,600. That is, the amount is calculated on the fixed, the same principal amount every month. Compound interest means every month, the interest is also added to the principal, and next month, on the total amount, the interest is calculated. For example, see an example. Amount is the 50,000. Commission, the interest is 10%. So in the first month, so both simple and compound, both are same. First month, only simple interest, 5,000 rupees is the interest. So in the second month, this 5,000 interest is added to the principal. So 5 plus 50. So next month, principal amount will be, for the next month of interest, principal amount will be 55,000 rupees. On this 55, 10% is calculated. 10% is calculated. Then it will be, the interest will be 5,500. Then this interest is added again to the principal. The principal is 55 now. 55 plus 5,500. For the next month, the principal will be 60,500. On this 10% is calculated. That means the interest will be 6,050. That means every month, the principal plus the interest is added to the principal every month. That is why the interest is also going on increasing every month. This is called compound interest. So simple interest, compound interest. So how will you calculate the simple interest or calculate the compound interest? How to calculate in the tally prime? That is our subject today, our topic. So we take up the tally prime. We will go. First of all, we have to enable the feature. The feature means company features F11. We have to enable the interest calculation is to be enabled. So it is to be enabled. That is, we have to enable in F11. So go to F11. And this is this calculation of interest related to the persons. So it will be in the accounting features only. In the accounting features, see the last one. Enable interest calculation. It must be enabled. It must be yes. And then for calculating interest, the bill-wise transactions, because they will calculate the interest on the bill-wise amounts. That is, when the bill is raised, so from that date, interest is calculated. For another bill, from that date. That is why bill-wise entry transactions, bill-wise transactions or bill-wise entry is compulsory. So it is to be always generally, even we are not calculating interest, this bill-wise entry should be always yes. So here, now it is must. So it must be yes already. So already we are using it. And interest calculation, we have to make yes. Okay. So this is saved. So interest calculation is enabled. Now go to the party, whether existing party or the newly created party. So I created already. For example, I will take up one lecture. That is one customer. This is our customer. Say Raghava Traders, Sundry Data. So all the details are okay. We know how to create this, how to create and how the account will show. That is the alteration scheme. And here, Sundry Data, then bill by bill. That maintain balance bill by bill. Okay. Okay. Here, we will give the number of days here. That is the default credit period and credit days we will give. So we can enter here, or when the invoice is raised. So at the end of the invoice, when the invoice is accepted, new reference will get that they will get the window, bill-wise details. And the bill-wise details, So for the new reference, we will give the number of days there. So we can give here or we can give in the invoice. Even if you give here, that can be the same amount will be shown there, same days will be shown there. That can be changed also. So whether you can give here or there, or even if you give here, it will be shown there. That can be altered. Okay, let it be. Here we can give, there we can give. So we will give the number of days, and then interest will be calculated from the. So when the due days are, credit days are given, after completing the credit day, that day is called due date. After completing credit days, it is called due date. So after the due date, if it delays the payment after the due date, you have to calculate interest. Sometimes if you don't give any credit days, means from the beginning, that is from the date of the invoice, interest will be calculated. So calculated interest will be calculated from the day of the, from the date of the invoice, or if you give the credit days, then from the due date, the interest will be calculated. Okay, so that is to be done. And now here, how we enable the interest calculation feature, enable interest calculation. But here after this, the interest calculation, the interest calculation option will be there. It is not showing here because even though we enable the feature, it is not showing. So there may be some mistake, means there is another in another place that is to be enabled. Then here, if it is not showing here, then go to F12. So come down here, provide interest calculation parameters. That is, here we enabled calculation of interest. So calculate interest. But how to calculate? How to calculate? Simple interest or compound interest, or from the date of the invoice, or from the due date, or whatever it may be. What is the method of that is called parameters for calculation. Calculation parameters means settings. So interest calculation settings, we have to enable this. So yes, we have to make it yes. Generally it will be yes, but if it is no, that this is not shown here, activate interest calculation will not be shown here. If it is not showing here, means F12, we have to enable that. Okay. Now here, this is activating the interest calculation feature. Calculated. Now we will have to tell the Tally how to calculate. That means the settings of calculation called interest parameters. Interest parameters. So if you enter this, so it will ask you interest parameters. Interest parameters. So this small window, this is only not simple interest or compounded. It is only for simple calculations. We use this window, small window, simple calculation parameters. Okay, simple parameters, but we require advanced parameters also. We require. That is why if this window is very small, it is called simple parameters. We want advanced parameters. So here in this window, press F12, it will ask you use advanced interest parameters. Make it yes. Okay, if you make it yes, you can use any small, basic or advanced, anything you can use. Okay, here. And then here, calculate interest transaction by transaction. So see, if there is one transaction, the interest will be calculated on the transaction. If there are more than one transaction, for every transaction, interest is to be calculated. One transaction, and again another transaction, again one after one, like that. On all the transactions, you have to calculate it every month. This month, there are one transaction. You calculate interest on one transaction. So next month, there is another transaction. So it will contact first transaction as well as sorry, second transaction also, it will calculate. That is called calculation of interest. Transaction by transaction, transaction of transaction. So one by one, we have to calculate. Sorry. So that is, we have to make it as yes always. And then we are giving the settings. We are giving the settings. When you are calculating the interest every month, we can override the parameter. We can change the parameters. That is settings we can change. Parameters means settings. Changing means overriding. So override that setting. So close that. Change it to new parameter. That is called override parameters for each transaction. You want to change, because if you take as, if you want, you can change. we don't want, we will not change. If you give no, we cannot change. So we will give it as yes. We will give it yes. So parameters, if you give it yes, and if you give it as yes, then again it will ask you override advanced parameters also. So do you want to override advanced parameters also? Yes. So if we can make like this, we can make the changes. If you don't want, just if we make this yes, both will be gone. If you want to enable, both should be enabled. To close that, only one, if you parameters, first one is disabled, both will be disabled. So this we want to change, we can make it as. We don't want to change, don't make it as. Keep it no. Okay. And then next one is include transaction date for interest calculation for amounts added for amount. It means include the transaction date, the invoice date. Transaction date for the interest calculation, amounts added means the date of the transaction is also taken into account. Added means from the date of transaction, the interest will be calculated. Suppose invoice is on first of April. So from 1st April, the interest will be calculated. Okay. If by default, it will calculate the interest from the next day because today is first. So on second, to second, one day will be to second. By second, it will be one day. The same day, it will not be one day. That is why it is asking, do you want to calculate from the date, same date? So it gives us yes. That means amount added means yes, same, calculate from the same day. To give yes. If you give no, if you don't make it yes, it means the transaction interest will be calculated from the next day. So April 1st is the bill date. So bill date, or from April 2nd, it will calculate. So whether it is bill date, whether it is day date, because if you give the number of days, that is credit days, so then bill date will be that taken after bill date only. After the due date, interest will be calculated. Otherwise, from the bill date, it will be calculated. So whether it is bill date or whether it is due date, from the same date, it will be interest will be calculated. To calculate like that, you have to make it yes from the same day. If it is no, it will be calculated from the same day. It will be calculated from the next day. So that will be check up in the transactions. Okay. And then below that, what is the rate of interest? So 10%, 2%, 3%, 4%, it is. That is the percentage. That's percent for 1 month or 1 year, like that. So this is the percentage I have to do. And then the percentage is calculated for month or year. So the months or the year is given in 2 ways. One is calendar month. So January 1st to January 31st. So February 1st is the next month. So it will take into account. If it is February 1st to February 8th only, the month. February, after that, March 1st is the next month. That is called the calendar month. Calendar year means January 1st to December 31st. January 8th means next year, January 7th. That is the year. From 8th is the next year. That is called calendar month. If you take into account the number of days in the month or number of days in the year. This is called calendar month and calendar year. 30 days month, 365 days year means 30 days month means without taking into account the number of days in the month, it will calculate interest after completing 30 days. For example, January 5th, from 5th onwards, it will calculate 30 days after completing 30 days, whatever it may be. After 30 days, it will calculate the interest. Suppose if you take January 1st, so if you give 30 days month, from 1st onwards up to 30, so January 30, it will calculate interest. So 31st, it will leave out. Otherwise, take in the February. In the case of February, if you take first, February 28th will not be a month. So February 20th is only 28 days. That is March 1st and March 2nd. So it will calculate interest on 2nd March only. That is after completing 30 days. After completing 30 days only, it will calculate with respect to the number of days. That is why generally calendar month will be taken into account. If you take the calendar month, it will take the number of days in the month. So the previous day in the next month will be 1 month. So January 1st to February 1st will take. January 31st it will complete. February 1st is the next month. February 1st to March 1st is the month. February 28th is month. So March 1st is next month. Like that, it will take the number of days into account and it will calculate that. That is called calendar month. And this is called 30 days is 30 days it will calculate, that is 30 days month. Similarly, calendar year, that I told you, 365 days means after completing, without bothering about the leap year on this, after completing 365 days, it will calculate the interest. So generally will take up, calendar month will take up. And then here, all balances, how to work. See here, what is the rate? How to calculate yearly or monthly? That is, the rate is for month or year. Okay. And then what are the amounts to be what are the amounts on which interest is calculated? Here, when you are selling the goods, the person is a customer, he is a debtor, his account is debited. Now interest also is debited to him. That is, debit balance is the amount is due from him. He is a debtor, his balance will be a debit balance. So only on debit balances you calculate the interest. When you are purchasing, for example, so the creditor account will be a credit balance. So on the credit balances, you calculate the interest. So debit balances for our customer, that is when you sell the goods, for debit balances will be calculated. When you are purchasing goods and credit balances, you can calculate, or you can calculate on all the balances, because debit balances, credit balance, because we purchase sometimes, we sell sometimes, and also when you are selling goods, so the balances will be debit balance, and the person, debtor, he may be paying money sometimes. So all the transactions will be taken into account to calculate the interest. That's why you can take all balances, or simply you can take debit balance for the debtors, credit balance for the creditors, or for anyone, all balances also you can take. Okay, now next one is how to calculate here. As it is to be calculated in special setting, that is, always we calculate always as per the all other requirements, the all other settings or all other parameters, they always calculate. So if it is always calculated, so it is to be calculated from the due date of the invoice. Due date means in the invoice, if you give the number of days, that is credit days, after completing the credit days, the day is due date. If you don't give any days, then the invoice date itself is the due date. It is to be paid. That is, from the due date, interest is calculated, whether the same day of the invoice or after some time which you give. So that is called the due date. So due date of the invoice, due date of the invoice. Invoice or reference, sometimes it is called reference also. So invoice, due date of the invoice, the reference, in such case, it is always to be calculated like this. Sometimes we don't give credit days. Then from the day of the invoice date, it is to be calculated. If we give the number of the credit days, then it will be calculated from the due date. But we have did not give the credit days. So it should be calculated from, the date of the invoice. But while calculating in the interest parameters, that is in the settings here, so it is not given in the invoice, the number of days, that is credit days not given. But that credit days, we can give here also without when in the debtors ledger, default credit period, we can give the period there. There we not given. And we can give there, or we can give in the invoice also. When the invoice is accepted against the reference, new reference, we can give the number of days. Or otherwise, the third place, here also we can give. This is only for calculating interest. Here also we can give the number of days. Okay. So in the two places not given means it will be calculated from the due date, that is our invoice date. Note argument. But here, if you give the days here, if you want to give the days here, then it is not caught always. So it is applicable from here. That is why it is taken as we have to give the number of days. See here, always means always as per the other requirements, other settings. But here, if you want to give here, we have to give the number of days. Where is that? That is why here we have to give past due date, past the due date by so many days. So the same thing, instead of giving 10 days there, we are giving 10 days here. So both are same. Okay. So if you want to give days here, you have to take it as past due date by 10 days. That is past the due date by 10 days. So that is why 10 days afterwards, after 10 days, we have to calculate interest. That is the due date is passed by 10 days. Because if it is not given there, so due date is from the date of the invoice. But he's saying pass the due date by 10 days. That is give the due date by 10 days. So if we do the period here, in such case here it is given as date of applicability. So nothing, the days are not given. We are giving the days here and making it applicable. The making the interest applicable here. That is why it's called date of applicability. So if you give the days here, date of applicability. If you take the, you did not give any credit days or given the credit days in the ledger or in the invoice, then you have to take it as date of invoice, the due date of invoice. Here you have to take always. If you give always, days are not given. So our days already given in some place. That is in the ledger or invoice. Otherwise not given anywhere. So that is the, so if it is always due date of invoice, same date of invoice or after the credit days. Otherwise, if you want to give here, go to past due date by so many days, 10 days, 20, 15 days, 20, whatever it may be. So like this, you have to take. So these are the two. Okay. Date of applicability, due date of invoice. So here, another one is effective date of, that we will take up later. I am making the video in two parts. So only these two I will take up, and simple interest and compound interest I will take up in the next video. This is one effective date of transaction. There is one more, that is, here I told you already. So if you take it as override the parameters, then advanced parameters also we can take. Override the advanced parameters. If you take the advanced parameters, here there is one more thing will come. Here there is another fourth one. So that is, when you are making the entries, you making the entry means interest entries, then you can make the changes. The dates can change. We can change the dates when you are making the entries. That's called date specified. Calculate from due date or date of applicability or effective date of transaction or any other date we specify during the entry. So date specified during the entry. This is overriding the specific, advanced parameters. Overriding the advanced parameters. This one is there. So this is the overriding. We are writing, changing the advanced parameters. So we are giving the new date. That is called this one. So only if it is enabled, if it is disabled, if it is not enabled, then that will not be visible. So that is only applied to overriding advanced parameters only. So that we will take up that. We will take up that in the next video. The effective date of transaction, date specified during entry. These two we will take up later. But not calculate, everything will be there. Automatically will do. But the date will be like this. So applicability and date of transaction. So in both the cases, we will check up. So now we are taking this. We are taking always and this one. And here, if we give yes, from the date of the transaction or the due date, it will calculate. If we don't give yes, then that it will calculate from the next day. So in both the cases, I will tell you. So this is one. And then rounding means the interest can be rounded up or can be taken in paisa also. If you take not applicable, the interest will be shown or calculated in paisa also. Or if you take it as, we make it rounding here, in the invoice, normal rounding, take 1 rupee, automatically it will be rounded up. So first we will take up without rounding. So that's all. So like this, we are making settings, that is the parameters in the ledger account, then accept the ledger. Okay. So we will be calculating the for that person only. Like, and then we have to make the entry. So we will make entry means we will sell the goods to him. So voucher, for example, 1st April is the bill date. 1st April we are taking and we are selling to Raghava traders. So Raghava traders we are selling, and then for sales we have to take ordinary entry. Sales entry we take, and then we are selling. What are the items we are selling? So I created many items. So if you press the space bar, we will get. See here, for example, Dell laptop we are taking. We are taking Dell laptop. So we are taking Dell laptop. So here, how many numbers we are selling? So we are selling 2 numbers. 2 numbers, each 25,000 rupees. For example, 25,000 rupees. Each one is 25,000. We'll do one thing. This one we will take up. See here. So we are selling here 4 pieces of Dell laptop, each 20,000 rupees. Okay. payable on 2/7. That is okay. Up to that period. Okay, we will take Dell laptops. We will take up 4 numbers, each 20,000 rupees. Each 20,000 rupees. So 80,000 rupees is the bill. Actually, in the case of simple interest, so the interest will be calculated on 20,000 into 4, 80,000. Every month it will be calculated on 80,000 only. That we will check up. So 80,000 rupees we got, 80,000 rupees. And if you give GST and GST, that will be calculated and the total amount will be there. Now we are not taking. If it is there, the total amount will be the principal amount. Otherwise, only this is the amount. So now, so that is accepted. Now, so you see, when we passed entry, we play sales, we passed entry now. See here, we have this entry, I will change the date something like this. I will do one thing. I will change the entry, not 1st April. I will take up 1st June, for example. 1st June I will take up. I will take up 1st June. 1st June I have taken this date as 1st June. Sales I have taken 1st June. Okay. So this will change. This in this problem, no problem. We can change it. So we can take it as, see, first instead of 1st April, we can take it as 1st June. No problem. You can take it as 1st June, and you will take it as August. That is June means it is 2nd September. You can take 2nd September. So from April, May, June, July. From June, July, August, September. Okay. So both are set. Okay. Now we will calculate. This is for June. Now you see how to calculate. See here, we have taken the date as 1st June. Okay. Now, just simply, that's all. Entry is over. Now, we have to calculate interest on this. So, there is another transaction that will be calculated. You will see later. For this transaction, how the interest will be calculated. See here, for calculation, it will say what you will do is, this tally, it will show the calculation of interest, that's all. And that interest amount is to be entered in the ledger account. That is in the party account, we have to enter the amount. So depending on whether it is compound entry, compound interest or simple interest, then we will see at the time of transfer of that money. So now, how we will see the calculation of the interest. So for that, go to display more reports, then go to statement of accounts, display D, statement of accounts, yes, D, yes. Then here, outstanding and statistics will be available. But now, because of the interest calculation we enabled, the interest calculation feature is showing up. So interest calculation. Now, interest receivable, we are receiving interest. So if you can interest receivable, we will see the interest from receivable from all the persons. Like here, if you calculate ledger, the ledger names will be available. Then we can see any number of any person we can calculate. We can see. See here we have calculated Raghava traders. So this is the interest calculation. See here we have to see from 1st April to not 1st April. So you have taken from 1st April, if the invoice is 1st April, from 1st April we can calculate. But here the invoice, what you call the sale date is 1st June. So from 1st June you have to calculate from 1st June to 1st June. 30 June it will not take. Education version will not take. So I'm taking it 1st July. So it will calculate. So 1st June to 1st July. Even if you give, for example, from 1st April to 1st July. So 1st June is the sale date. So 1st July is the first month. Even if you start from the year beginning, it will calculate from the invoice date only. See here, it will calculate from 2nd June. See here, 1st June is the invoice date. So the number of days, that is credit period, is not given. So we have to calculate from the date of the invoice. But here it will calculate from the next day by default. By default, by the next day it will calculate. So from June 2nd it is calculating. Or go to Alt G. So go to Alter Master. Go to Ledger. So in this case, Raghava Traders. See here in that configuration. See here. If you make it yes, means it will calculate from the same date. If you make it yes, so it is saved. It is ledger is saved. Now escape, escape. So we'll go here. So here, if you see from 1st April to 1st July, or the date is, you may be confused, you may be confused. So 1st June to 1st July. 1st June to 1st July, it is calculating. See, from 1st June itself, it is calculating. See, previously, from 2nd June, the next day it is calculating. But now it is calculating from the 1st day, because we have given there added invoice date, added amounts means it will add from the 1st day also it will add. The same date also it will add, whether it is due date or invoice date, it will calculate from the 1st day itself. So now we can change alt G. We can go and again we can change. Alter master, it is a master. Ledger account is a master. So in this master, we can change the master. So here we go. Here if you take no, then see here, now from 1st June to 1st July. So here, now it is calculating from 2nd June. See, if you give yes there, it will calculate from 1st. If you give no, it will calculate from the 2nd. So here, now it is calculated. So like this, we are checking the interest for 1 month. We can check up 2-3 months also. So from 1st June to 1st August. So it will give for, see, 2 days, 2 months it is giving. 1st June means 1st June to 1st July, 1st July to 1st August. So 2 months you are calculating. If you take for 1st June to 1st September also, we can calculate. So it is for 3 months. You see here. Here, see, this is simple interest. So every month the principal will be 80,000 and the amount will be 1,600. You see, from 1st June to 1st July. So it is calculating for 1 month. The principal amount is, see, this is the original amount. Pending amount means the amount on which interest is calculated. So the pending amount means that is the principal amount. So it is 80,000 for the month of, that is June to July. Again, if you take 1st June to 1st August, the amount is the same. From 1st to July, 1st June to 1st August also, the amount is the same. So the principal amount is the same. Okay. And now, so we can calculate interest for 2-3 months and total amount can be transferred to his account, because when he is paying the money after delay, when he is paying till that date, at a time from the date of the beginning, at the date when he is paying, up to that date, we can see the interest, calculate interest, and that amount can be transferred to the account. It will not be transferred. Here, we are calculating interest. 1st June to 1st July, we calculated for 1 month. We calculated for 1 month. Okay. So this is only showing the calculation only. It is not showing, not transferring the amount to the person. I will tell you. See here. If you come here, interest calculation. If you come here, outstanding. If you go to outstanding, ledger, go to Raghava Traders. So only the principal amount is shown. Only the principal amount, the same amount is shown. No interest is shown here. Even if you see from 1st June to 1st July, the same amount, 1st June to 1st August. So amount is only the outstanding amount, the balance, bill amount, only that amount is shown. Interest is not shown, added. But interest is calculated in that, only calculation will be shown. That should be transferred to the account. So here, we take interest calculation and ledger and Raghava Traders 16217. For example, 1 month we have taken. So this amount is to be transferred to the person. Or one more thing I will tell you. Okay. So here in the ledger, sorry, we take up ledger, VAL, sales. So in the sales, this is the invoice. In the invoice, you can give the number of days. Here, against due reference, we are giving 10 days. Then the due date will be 11th June. So interest will be calculated from 11th June. If you give yes, from 11th itself, interest will be calculated. If you give no, the next day, from 12th June will be, the interest will be calculated. Okay. So now we are making this. For example, this is, so when they are making what you call override advance features, that is why every time we make entry of the amount, then it will ask you. So we are not changing anything. We are not changing anything. Due date of invoice, everything is like that. So we are not changing anything. Just accept. Yeah, this is about the tax. So now you see the interest. Now you see the interest. D statement of account, interest calculation, ledger. So then go to Raghava Traders, calculate 16217. So here, this is the interest, you see. So here it is calculating from 12th June because 1st June is the due date. Previously it calculated from 2nd June. Here now it is 10 days we have given. The due date is 11th June. So 11th June is the due date. The next day is from 12th June. It is calculating. Okay. So we are given the date. For example, here already you are going. So here alter master, not alter master. We will go to sales account. Sorry. See here BAL sales account. In the sales, Raghava Traders 1st June. In the sales invoice, we have given the days here. So here we remove that. We are not given any dates here. We are not given any days here. Then without giving any days, we accepted the invoice. So invoice is accepted. Now no days are given. Okay. Now I told you already. Alter, go to the ledger, go to Raghava Traders. Sorry. Go to Raghava Traders, and here I told you already. Here always means as per the other requirements. So due date, whether days are given, due date will come into account. Otherwise, date of the invoice will be the due date. But here, for example, if you want to give the number of days here, you can give here also. If you are not given there. So in such case, what to do? We have to give as past due date by 10 days. The same thing we are giving. In such case, you have to take as date of applicability. So we have taken this here, calculated, okay, completed. Now you go to calculate the interest, display, statement of account, interest calculation, ledger. Now go to Raghava Traders, 1st June to 1st July. See, the same thing. So for 1st June is 2nd June. It is taking. No, sorry, it is not taken. Now, we have not saved, it seems. In the sales account, in the ledger, it is not saved. Alter, taken going to Raghava Traders, but here ledger is not saved. Here we are taking past due date 10 days and date of applicability we have given, and this is okay. This is not saved, it seems. Okay. So now we can go to this voucher. Display statement of accounts, interest calculation, ledger. You take this one. See, from 1st June, so you will take a 1st April also, you can take. From 1st April, 1st June is the first month is 1st 7. Here you see, here, 2nd June is taken, no. It is taken from the number of days are given. See here, what is the sale date? Sale date is BAL. Sales, this is 1st June. From 2nd June, you should not calculate. Here, alter, ledger, Raghava Traders. If you give this here, 2nd calendar month, past due days by 10 days, date of applicability correct. Date of applicability, that is making applicability 10 days means June 11th you have to take. June 11th it has to take. This one, and then BAL sales. In the sales invoice, you have not given any number of days, any days. So not given dates. So here, calendar month, here it is not given. So it is asking advance parameters, we have not changed it here. So here all balances, past due date, 10 days is given, 10 days, date of applicability from 1st June, date of applicability. Okay, now calculate. So the parameters is asking, we have to give the parameters correctly. We have to give. So now go to display statement, interest, ledger. Raghava Traders, 1st June to 1st July. See here. Here. So 1st June means 10th plus 10 days means 11th June is the due date. 11th June is the due date. From 11th June means 12th June it is calculating because amounts added we are not given this. We give yes, we calculate from 11th June. We are not given that. So from 12th June to 1st July. So here it is empty. So if you give the 10 days, in the invoice or in the ledger account, in the party account, the default credit period, give the 10 days there, or give the 10 days in the invoice, in the new reference, you have given the dates. It will, then in the check case, here you have to give dates in the settings, that is parameters, always due date of invoice will give, due date of invoice. If you give the dates not given there, in this case, in the parameters itself, if you give past due date by 10 days, then date of applicability. So that is what we have to do. Okay. So this is the thing. This is the meaning of this. Okay. In the ledger, if you take and if you give the parameters, in the parameters, so this is the thing, past due days, otherwise, always means, always means date of due date of invoice. Okay, whether it is given or not, given due date, otherwise invoice date. Otherwise, if you want to give here, in such case here, you have to give days means past due days, then you give the number of days after that you have to take it as this one, date of applicability. So always date of due date of invoice or past due date by number of days, date of applicability, both will be the same. Okay, and here we need not take this only for the third one, date of specified date specified during entry. For that, it is must. Otherwise, it is not must. Okay. Every time it will ask you, so we have to check up the settings, whether correct or not. Then only it will calculate correctly. So here I will take up always. Okay. And due date of invoice. Okay. So this is completed. So okay. Now this is the method of calculating the interest. So I am taking only 2 items and the other 2 items. That's the other 2 items. Other 2 items means, you see, I am taking up now. I have taken up only 2 items. Calculation will be the same. Here we have taken only here due date of invoice. Here always. Otherwise, date of applicability. Here past due date, number of days, then date of applicability. These 2 we are taking. These 2 we are calculating. Another one is here the effective date of transaction and date of specified date specified during entry means if you make only yes. So overriding means this will come. You are not overriding, this will not come. This one and these 2 you will see in the next video. Okay. So according to this, we are calculating, and here if you make it yes from the same date, it will calculate from the same date of due date or invoice date. From the same date, it will calculate if you give yes. If you give no, it will calculate from the next day. That is by default, it is next day. If you want the same date to be calculated, you have to give it yes. So like this, we will calculate. And how to transfer, because it is showing only calculation but not transferring. So here D, S, I, L. It is not calculating. So from 1st April, you have taken from 1st July. If we take, even if that, it will calculate from June only, 12th June. 12th June, it is taking. Thus, DL, sales, now we check up sales. In the sales, any date are given. In the sales, no days are given. And in the setting, always, yes, new date of the invoice. Okay. Okay. Now, DSIL interest calculation and Raghava traders. So 1st April to 1st May, no, actually not sale, no sale. 1st May to 1st June, no sale. So 1st June to 1st July, it is calculated 1067. It is calculated from the 12th June only. Okay. So it is calculating. So it is calculating how this is to be calculated, transferred to the person. It is not automatically transferred. It will not transfer automatically, only to show the calculation. You have to calculate, because if you don't see here, 1st June to 1st July are calculating. If you calculate from 1st July to 1st August, 1st July to 1st August, then the total will be shown, because from the beginning, from 1st June it will show, because total interest is calculated because the previous month amount is not taken to the account, That is, if the amount is transferred to account, then for the next period, for that period only the interest will be shown. Otherwise, the total interest will be shown, even if you take from 1st April to 1st October. So it will show for the 1st October, up to 1st October, total amount will show, total interest. That is why every month it is better to calculate and transfer, or if he is paying after some time after the delay, if he is paying, when he is paying from the beginning till the date of payment, if you calculate, the total interest will be shown, that can be transferred. Even then, that will be transferred to the account, then only from the account you have to get money. That's why how to transfer now. How to transfer. Here, this statement of account, interest calculation, ledger. So, for the first month, always calendar month, always due date of invoice reference. Okay. And one more thing we will take up, from the same date we will take up, just you will see. From the date, same date we will take up, and we will see this. Okay. And then now ESIN. Raghava Terrace, first date. We will take up the same date we will take up. First June is the sale date. 1st June to 1st July we will take up. 1st June to 1st July. It is taken from the same date we started. Yes, so that is starting from 1st July, 1st June. Okay, that's 11th June. Okay, now we will turn to this one. How to transfer this one? So it will be shown, it will be transferred. If we transfer, that's all. From next period, that interest only will be shown, the old amount will not be shown. Otherwise, total will be shown. How to transfer? You have to make a voucher. Why can make a voucher? So how you will make a voucher? Now we got it as 1,120. What is interest we got? DSIL. Status 1st June to 1st July. So 1,120 for example. So for this 1,120, how do you transfer? So in this case, you have to transfer the amount by journal. You can take journal. You can make a journal and then debit status account 1,120. Then it is not, it's a new reference because this amount will be reduced later. So new reference 1, and then so here again it is coming always, and then the due date of invoice from 1st April. It is giving a 1st April, but it will only not take 1st April. Okay, interest is 120. So like this, if you do that, so automatically we are making the entry by manually. We are making the entry manually, but we are making the entry manually. But here you see DAL, sorry, DSI ledger. You don't see here. 1st June to 1st July. The interest is shown, already shown. 1st April to, it is showing from 1st April, as well as by mistake we did from 1st April it is showing. Okay, so that is why the interest will not be vanished here. The interest is to be taken from here. That is why how you will calculate is DAL Ramana Traders. See here. So interest is calculated from 1st April. It is wrong. We are not. It is wrong. So interest is to be calculated from 1st June only. DSIL ledger Ramana Traders. So 1st April is wrong. From 1st June to 1st July. So this is the 1,120 rupees we have to transfer. So it's not going. It is showing still. That is why we have to transfer through another way, through the debit note only. So when your goods are purchased, sold to them, when they return, we issue the credit note. When his account is to be increased, like interest or anything, then in such a case, his account is to be increased means his account is to be debited. That is why we have to issue debit note only. So through debit note only, we have to make the entry. So here, voucher, Alt F5 is the debit note. Alt F5. But this debit note used for not used for other purposes. It is used for interest purpose. Interest is to be calculated. It is enacted. That is why here go to change view. Here change mode. We go to that. So invoice, account basis service. See here use for accounting, interest accounting. So that we have to take. And here it comes into account. It comes into account here. I told you simple interest or compound interest. So when that is taken for accounting, interest accounting, it will ask you compound or simple. First you will take up simple account. Simple, you will take up simple. So then you will take the name date 1/7. 1st June to 1st July. So 1/7 you will take up. See the Raghava traders. See 1,120. So that's all taken. That is the number 6 is the invoice number. Which invoice number? Then save, control, accept, that is control A. Then new reference number 1, the interest number 1. That is the debit note number 1. Here again, every time it will ask you, you check up whether it is correct. So up to 1st July you calculated. From now, from 1st July it has to calculate. That's why calculate from due date of invoice and date 1st July. So that you have to check up whether the settings are correct or not. So interest received. Here we have to calculate received interest. So we have to create an account. Interest received, like interest income, that is indirect income, taxes not applicable. So save that and you get. Now you see the interest is transferred here. Now if you go and see the interest calculation, DSIL, if you see, so where you calculated from 1st July, 1st June to 1st July. Say 1st April to 1st June. So no interest. So 1st June to 1st July also, there is no interest because the interest calculated is taken to the account. It will not take automatically, we have to take. If you don't take it to account, it will show the total because when he is paying a delayed payment, the total amount we can know, total interest, we can transfer, we can take money. Otherwise, every month you have to transfer. So we can do anything. Every month you can transfer, or we can transfer at a time when he is making the payment. That time the total interest also we can calculate. So like this. And now this is over. And now you see, this is a simple interest. Now we see again, we go to L interest calculation ledger. We go to the next period from 1st July to 1st August. From 1st to 1st August, it is calculating from 2nd July. Say next day from 2nd July to 1st August, 1,600. See the pending amount 80,000 only. Every time it will show 80,000 only. So now you will transfer this amount also. Voucher, that is debit note, Alt A, and here change mode, it is control H. You can click control H. Again, use for interest accounting, and this is amount treated as compound no. You take the no amount, and now here go to the traders. First July we completed. I think it is 1st August. So 1st August, and then control H, interest account, no. So it is 1st August. Yeah, 1st July completed. From 1st August, you have to take this one. Set here. Same thing here. Go to. Again, when he is paying now, what is given there? Paying on 1st September. Okay. So 1st September they are paying. This is from this one. So from 1st August, also if you calculate, all the calculations are correct. We will take out. And then next one is, we need not go to the calculation. Here itself, again, Alt F5, control H, interest accounting, compound no. Now go to date is 1st September. 1st August over. 1st September, Raghava traders. So here, from 1st September is over. So 16,600. So here. So everything is okay. So see, everything is okay. So from 1st September, if you have, you can go on calculating. If you give some date here, it will stop. That will come later. That is called the advanced configuration. So like this, every month you have to calculate. So now you see in the interest table, interest window. So it is transferred means interest will not be available there. Now you can see the Raghava account, Raghava traders. You go to Raghava traders. See here. So from 1st July, June, that is 80,000 sales. First month we have given the period, grace period. That is why it is taken for less period. From second month onwards, the total month we calculating 1,600, 1,600. The principal amount is the same. Interest is also the same. Okay. So in this case, I will tell one thing. I will delete this. I will delete the interest. Now we will take out the compound interest. See here, display statement of account, interest calculation, ledger. So here you go. The first month will be same, whether it is compound and interest, only from first month after interest only it will be added. So here, you got it. 1st June to 1st July, you take up, say here, this is the first month, just 1st July, 1st June to 1st July. Now we are transferring. So debit note, control H, accounting. Here you see, amount to be treated as compound basis. We are taken less. We are taken no. Now we will take it yes. Means compound. Every month it will be compounded. Now you see, go to the first month interest will be the same. Sorry, what is the date? 11th June. Date is not given. 1st July. Sorry, 1st June to 1st July. So this is the amount we have taken. We must give the date of the month ending. Date and control H. Transfer. I mean, ask the control H means control H used for accounting, interest accounting. Then date and everything is to be done, and it's good. Okay. Now it's okay. Now what is the amount? Interest amount 1,120. 1,120 plus 80,000 is the principal. So for next month, principal will be include the interest also 81,120. So next month you see this display statement of account, interest, ledger. Go to this one. So from 1st July, we can do the same thing. 1st June to 1st July completed. 1st August. You see, okay, 1st August. So amount is 1,622 because it is compound interest. The actually 1,600. If it is simple, it is compound. That is why 81,120 is the principal amount now because it includes interest also last month. So next month, if you see next month, 1,622.45. So this will be the principal for next month. So you see, this will transfer. This is over. This will transfer now. Voucher and debit note, control H, interest accounting. This one, we have to take it as yes, that is compound. Date is 1/7/17. Sorry, no, not 1/7. Date is 1/8. Date is 1/8 if we take, see here, 1,622.40. So it is transferred. It is transferred. Now it's over. Next, now we go and see for the next one from 1st August to 1st September. 1st August to 1st September. Say display, so statement of account, interest calculation, ledger. So 1st June to 1st September. June comes, August completed. So 1st August to 1st September now. 1st September, if we take, see the amount. So the principal amount is 82,742 rupees 40 because the last month the interest also added to the principal. Okay, like this it is. So it is to be transferred. It is to be transferred because it is the problem it is given on 1st to 2nd September. Take it as 2nd September. So up to 2nd September we will take up. Okay. So now voucher, put the voucher, small alt. Yeah, because it is already showing there because when you are in the business, if monthly once only will make it, then we have to take this voucher and control H, then interest ratio. This is compound, and now date is first. Now we'll take up 2nd September, 2nd September, and then Raghava traders, 1170 because increased, because one day increase now. First of all, we calculate up to 1st September. Now we are calculating up to 2nd September. So now calculate. Raghava traders, then calculate. Okay. So like this we calculated. So we have to take, when we are transferring that, simple or calculate compound. If you do compound, next month it will be added. Interest will be added to the principal. If you do simple, it will not be added. Now we go to Raghava traders. Now we see. See here, for the first month will be the same, and then it is increased for the full month. That is compound interest, and next month again it is increased, because compound interest means interest will be added to the principal, so it will go on increasing. That means the interest also will go on. This is how we do this. So here we completed how to calculate the interest. Here, this is the thing, and enabling, and here we are taking yes means every time it will ask you, you have to check up whether the settings are correct or not, the parameters are correct. If you want to change, you can change the parameters. The date also you can change. That I will show you in the next video. So here it is giving a yes, take it as no. Yes means from the beginning, no means from next day. And here always, as well as past due days and number of days. So both you check it up. And here, if you both always means due date of invoice, past due days 10 and number of days means date of applicability. And all this one we have done this. And about these two specified date specified during entry or effective date of transaction, we will take up in the next video. Okay. So this is about the simple interest as well as calculating on compound interest, and under two methods. One is due date of invoice or reference number, due date of invoice. Another one is date of applicability. The other two options we will take up in the next video. Okay. So this is about the last topic today, and I think you understood well. If you have any doubts, you see the video once again. If you see the video once again, and for tomorrow I will give the problems, some problems. You try. I will show some problems, and I will show the problems in the video. And when you are playing the video, stop the video, see the problem, and try the problem. So I will give problems in the next video. Okay. Now this is how it is. Okay. And if you have any doubts, you can see the video again, or still if you are out, you please post your doubts or your problem in the comment section. Then I will try to solve that, and I will try to answer you. Okay. That's why I'm asking you to post the comments in the comment section. Okay. So with this, today class is completed, and I wish all the best to all the students. Bye.